Right now, the attention is far too much on what happened in the second quarter of the fiscal year, July to September. So I'm starting with that very briefly. It is not that we think that the second quarter slowdown is purely a data artifact, and as more data come in, it would automatically be upgraded. Numbers would be revised higher. Or for that matter, it could be a simple seasonal factor because of rains, because of some religious observance in September, etc. It could be either of them, or it could also be something more fundamental as the ability of the state to spend what is budgeted, and also what is going on post-COVID in the private sector in terms of hiring and compensation, etc., which may also have a longer-term bearing on urban household income, consumption, and savings patterns compared to what we had before COVID. So there could be any number of factors, and we are at this stage not necessarily ruling them out, that they could be very temporary, or they could be mundane, or something more serious. But nonetheless, I think the fact remains that we will be on track to achieve the kind of growth numbers that we had penciled in the economic survey in July, somewhere between 6.5 and 7 for the whole financial year. But that is not the focus. The focus is to how to make sure that we grow at a sustainable rate in a world that is going to be extraordinarily difficult, as we heard yesterday from many speakers, which we are aware, because I think it is not fully appreciated that the last 40 years of paradigm of globalization, continuous rise in trade volumes, free movement of goods, people, capital, etc., all those things are going to be not necessarily possible with the same felicity with which we got used to them. And then geopolitics is fragmented, and more importantly, the agenda of emission mitigation is also a huge overhang on developing countries in terms of balancing their economic aspirations and climate change management. So at the moment, what we are happy about the fact is that on the right side, what you see is that capital formation as a share of GDP was 27.3% pre-COVID, and because of balance sheet issues in the private sector, and now it has increased to 30.8%, a 3.5 percentage point increase, largely because of government-driven public investment. But I must add that the private sector is also beginning to deploy its capital with the much better balance sheets, much better profitability, and that we think will continue. So in that sense, we do see this number heading towards the mid-30s in the course of the next 5 years. The point I made earlier about the global situation was evident even in the second quarter, that there was a spike in global uncertainty, there was a spike in global supply chain disruptions because of the war in Middle East, or the conflicts in Middle East and the ongoing conflict in Ukraine, etc. But please believe me that it is not something that will be something temporary. As I mentioned in the next 5 on the left side, these are going to be enduring challenges, and we need to accept them. And that is what will also dictate what the trend growth will be. It will not be something similar to what we experienced between 2003 and 2008, but something lower. That is because of factors beyond our control. Because with all our imperfections between 2003 and 2008, in fact, there were even more imperfections than now, we could achieve 8 to 9% growth in real terms for 5 years between 2003 and 2008. Because the global environment was far more conducive. And therefore, we cannot take that for granted. And that means we have to double down much more on our domestic efforts. And that is why I'm happy Janmay spelled out some of the areas which are not necessarily in the top of our consciousness. And what you see is that we have listed down, and since it is a little too far, and that is why Dinesh moved to the other side of the stage, and there is no computer here for me to see it very clearly. There are 5 different areas, whether it is MSMEs or agricultural sector or investment in quality and R&D, and continued investment in not only in infrastructure but other areas. These would be important challenges.